Hey everyone, welcome to Fundraise with Elsa, where we dive deep into the world of venture capital, fundraising, and the problem solving that's going to shape the future of tech. I'm Elsa Mo, venture partner at Orion Opportunity Fund. And if you're gearing up for your next round of funding or seeking insights into scaling, then you're in the right place. Today, we're so lucky to have Laura Katzman from Buoyant Venture Capital to talk all things climate tech. It's the first time we're covering this topic, so really excited to have you here, Laura. Why don't you start with an intro of yourself and the fund?
Awesome. Thanks for having me, Elsa. Um, I'm a partner at Buoyant Ventures, and I have been with the fund for about 4 years now. I joined as an intern and worked my way up to partner. And prior to joining Buoyant, I received my MBA and MS in sustainability at the University of Michigan. While I was in school, I helped launch Michigan Climate Venture, which is a student-led fund that makes pre-seed investments in climate in the Great Lakes region. But before that, my first career was as a CPA. So I worked in the investment management industry. I started my career at Deloitte and worked at a publicly traded asset manager as well, really focused on revenue accounting and valuations. And I saw how fund managers were starting to pay attention to renewable energy investing and ESG and saw it as an inflection point in finance. So I went back to school to pivot into climate investing. I was lucky enough to become Buoyant's first MBA intern. I joined after the first close of the fund. So a little bit more about Buoyant. We invest in digital solutions to climate change. That's across both mitigation, which is reducing greenhouse gas emissions from the atmosphere, but also resiliency or adapting to the impacts of climate that we see today. So since climate touches pretty much every industry, we do invest across a number of different verticals, but really key to our thesis is the software component. So we will invest in simple hardware as well. To us, that's a sensor or a camera that connects the digital and physical world, but we're really looking for CapEx light solutions. We invest seed Series A, prefer to lead, and the last thing I'll mention is that we are a full-time team of 4 headquartered in Chicago, which is where our GP, Amy Francetic, and my colleague, Alex Bahar, both sit. Our incredible EA, Joanna, is in Atlanta, and I'm here in LA. So we are a distributed team.
That's really awesome. So refreshing to see a fund that's fully focused on climate. What would you say is your guys' North Star in terms of how you guys measure sustainability?
That's a good question. I think every fund's a little bit different. Some funds will have a target for removing a certain amount of gigatons of carbon or greenhouse gas emissions from the atmosphere by 2030 or 2050. But since we invest across adaptation as well, it's harder to have one metric that captures all types of impact. We also invest in a lot of software, so oftentimes it is an enablement versus, we're not investing in direct air capture companies, for example. So we're just looking for companies that have sizable impact, whether that be on emissions, whether that be enablement of renewable energy, that could be lives and livelihoods impacted. And by that, we would mean like an actual life or someone's livelihood as in their business as well. So it's a pretty broad definition of impact, but that is very core to our mission.
And based on my understanding, you guys don't really want to compromise on financials, right?
Right. Yes. So we are a finance first fund, which means that we expect to make, market rate returns for venture capital. And that goes back to our thesis of investing in digital solutions. So these companies don't need quite as much capital to scale and to exit as maybe some harder tech solutions that might need longer than the 10-year life of the venture fund. But yes, while impact is very core to what we do and why we do it, we're a finance first fund.
Yeah, that makes a lot of sense. And based on our last conversation, it sounds like Buoyant is now closing Fund One and entering into Fund Two.
We have a handful of deals left to do in Fund One, and then we'll be out fundraising Fund Two later this year. Yeah,
Okay, cool. Yeah. And how do you see the thesis between Fund One and Two differ, if at all?
it'll be the same. So we're still doing digital solutions to climate change, still focusing on like decarbonization and resiliency. We have a number of stated verticals on our website. So if anything, we're maybe broadening a little bit to include industrials, for example. But otherwise, we're largely staying the same for our thesis. Still seed Series A as well.
Okay, sounds good. Look forward to that new fund.
Thank
And
you.
so, with the new administration coming in earlier this year, obviously there's a lot of headlines and changes in the space. So, what would you say is the lay of the land right now, and how is the new administration and certain legislation potentially going to change your investments?
Yeah, it's a good question. And I feel like we could talk for a long time about some of the changes that have been made that impact the climate sector. Maybe one thing to start with is the Inflation Reduction Act, or the IRA, that was passed under Biden. The IRA provided a lot of incentives for and funding for clean power, and that also created millions of jobs, primarily in red states. So a lot of people in the climate industry thought that before Trump came into office, thought that some of those tax credits and incentives would be safe because they were benefiting states that voted for him. And people were referring to kind of an approach of maybe it'll be a scalpel, not a sledgehammer, in terms of repealing the IRA. I think we haven't quite seen that play out. There's still a lot in the air, up in the air, but the administration has paused disbursements of funds that were appropriated through the IRA. So there are some companies who were promised or even had signed contracts to receive money to open new plants that aren't able to do that because everything's kind of frozen right now. So that's a really big headline impact that's impacting climate. And I'd say that the IRA provided a tailwind to the climate industry over the past handful of years. But in terms of how that impacts our thesis, since we invest in software solutions, none of our companies receive IRA funding or any form of a tax credit. So that means that these companies, don't need necessarily hundreds of millions of dollars to scale and open a first of a kind project site or a manufacturing plant. And we won't invest in companies that rely on tax credits to make the unit economics pencil out. So while the potential repeal of the IRA and the frozen of funds doesn't directly impact our companies, I think it just impacts the industry as a whole. And so that's really causing a lot of uncertainty. And I think that's the big takeaway, is that uncertainty is really tough when you're trying to invest in infrastructure or plan for the future. So that's going to impact the industry overall.
Hmm. And in terms of, I guess we have now talked more about leaving the climate accord again. So what would you say was the impact when we first left and then rejoined and then now leaving again?
I think that goes back to kind of uncertainty. I think, being in the Paris Agreement, I think the US had a seat at the table in talking about how we want to make changes and move forward globally to address climate change. And so it's kind of like whiplash, like joining, leaving, and joining, or the other way around, so like leaving again. I think how it could impact is just that other countries will be more of a leader in that category. So, for example, just in renewable energy broadly, China is one of the biggest manufacturers of solar cells, for example, and a lot of, going back to the IRA, if we kind of repeal a lot of these tax credits, then we're going to fall further behind in that race. And I think we want the U.S. to kind of dominate the renewable energy industry, and I think us kind of taking these steps backward will just allow other countries to fill in that hole.
And in terms of overall emissions, do you see that we have a path to sustainably reducing that, or because we're leaving and because the administration hasn't shown really strong interest in prioritizing overall emission from the US, do you see this as a net negative in the long term?
So it's a hard question to answer, just because if we think long term by 2050, I hope the answer to that is no. But it's a little too soon to tell, unfortunately. But I think while a lot of people are talking about AI dominance, for example, right? And that is going to contribute to a lot of load growth. And so a lot of people in climate and energy broadly are talking about how we're going to need all types of energy to power AI and data centers. And so I think that there's still, pockets where there's space for renewable energy to shine and carbon-free energy to shine. And so I think we'll see maybe a little bit of focus on that over the next 4 years. But again, by 2050, I hope nothing. I hope we still kind of meet our goals there.
Yeah, it's really interesting. At Orion, we look a lot at the AI startups, and a really key issue is all of the energy and the kind of shortage of energy that the industry will face as we use more chips, as we use more compute power.
Yeah,
And that's not even considering, in 10 to 15 years when quantum computing comes into fruition, what the energy landscape is going to look like and how we're going to fill that gap. So I guess in a sense, yes, there may be more emissions, but at the same time, through investment vehicles like yours, there, would hopefully be more solutions to tackle that sustainably.
absolutely. Yeah, I think this kind of period of low growth presents a lot of opportunities that can help us not slow down the AI race, but also meet it power it in a sustainable way.
Mm. And so far, if you look at Fund One and your investments there, what would you say was your biggest lesson learned there?
That's a good question. So yeah, to maybe caveat, so we it is Fund One. We've made 15 investments to date. So thinking about those companies and some of those lessons learned, maybe it's helpful to talk through an example of one. We had one company that we wound down. And so that is a company that was in the adaptation industry. They specifically were looking at stormwater management and sold kind of a digital twin technology to municipalities. And the technology also had industrial applications, and they were planning to expand their focus and kind of diversify that customer base. But after a couple of years after we invested, we sadly had to wind that company down, and we learned a number of things. I think one would be just how difficult it is to sell to government entities. It's definitely not impossible. A lot of companies do, um, but a lot of offices have a small budget for innovation. They might have money to do a pilot, but then they need to go. The internal champion needs to go kind of fight for additional budget at an annual planning meeting. And if it's not a tool that's used really, really frequently by these entities, it's hard to compete for budget, even if it's going to save a lot of money down the line from extreme weather events, for example. So we learned quite a bit just through that experience.
It sounds like for a lot of startups, selling to government as a priority can really be a double-edged sword. It can be either something that makes the company or breaks it.
Yeah, absolutely. I totally agree. So I think that just now when we talk to more companies who are selling to government, I think we're kind of smarter about it and kind of understand just how they can go about or how they should go about fighting for that budget allocation and what kind of tools would hopefully get their attention more.
Yeah, so speaking of budget allocation in the government, with Doge and the cuts going on, what do you see as the future for any sort of climate related government work?
Such a good question. All the government cuts are, I mean, it impacts so many different agencies, but it impacts climate as well, right? So there's been a number of layoffs across the EPA. I think earlier this week, a couple days ago, there was a flurry of deregulatory moves to roll back regulations for clean air and water. Also at the loan program office that was making a lot of those loans to energy companies, and also at NOAA, which provides weather and climate historical data. So it's a little bit frightening. I think one example of that is at Bonneville Power Administration. They're the electric grid operator up in the Pacific Northwest. They had a number of layoffs, including with electricians and line workers, and there were a lot of concerns about being able to maintain the electricity supply. So in the end, a number of the employees were offered their jobs back. I think it was less than half, but still just kind of shows some risk of unintended consequences with these mass layoffs. But I also think, the loan program office, for example, is not going away. I think we're just going to see a mix or a shift in maybe what the focus was. I think in the current administration, there's going to be a lot of focus on natural gas and nuclear and geothermal, for example. And I think like in the last 4 years, a lot of that money maybe wasn't as much allocated to those types of projects. So investments will still be made, just maybe it'll look a little bit different.
Mm, yeah, that's fair enough. And I guess it's really way too early to tell. We're like 2 months in, so
Still too early. I know everyone is just so uncertain right now.
yeah, it's all speculation at this point.
Yeah.
And on a similar note, what would you say are some of your takeaways from your most successful investments? How are you going to continue to look at founders and the team and the technology and the business?
Yeah, it's a good question. So maybe to talk about our most mature company, it was the first investment we ever did in a company called Raptor Maps. We co-led their Series A, and they recently closed a successful Series C at the end of 2024. But they use drones that fly over utility scale solar fields, and they use AI to understand when a solar panel needs to be repaired or cleaned or needs vegetation management, for example. And this ultimately makes the physical asset perform a lot better. And so they've expanded their product as well. They have a software suite. They aim to be the book of record for the solar industry, and they're well positioned to do that given the vast amount of data they collect. Um, some things we learned from that deal, I think, first is just how incredible the team is. The founders, Nikhil and Eddie, they met at MIT, and they've just done a really good job each step of the way, each phase of growth for the company. They've been able to rise to the occasion and just lead the team very well. And they also have really focused on quality, which has paid off. As more people enter the market, or as more companies enter the market, they've really been able to stand out because they offer a high quality product. But other things we're looking for, especially looking at climate investments, we're really looking for companies that deliver real business value alongside climate impact. So that could be like resource efficiency, that could be lowering costs, that could be improving profit, whatever, reducing risk, whatever it might be. But you need that business value alongside climate impact to have a real durable, sustainable solution.
Mm, okay. Any other lessons to share? I know we touched a little bit on the government side of things. Any lessons from the least successful investments?
Um, That's a good question. I think maybe one thing that's difficult as a venture investor is knowing, I guess, when you make the initial investment, venture investors reserve capital for follow on funding. But if a company isn't performing well, there becomes a time where you need to like not invest in follow on rounds, and that decision can be quite difficult. Because of course you want all your companies to succeed and you want to support your founders. But it could be that a company just continuously isn't hitting milestones, or the management team is ineffective, or there's been a change in the macroeconomic environment that's negatively impacted the category. So I think it's important to understand, like keep an eye on those things and kind of know when it's time to maybe exit a company and help them find a home versus continuously doubling down, and rather use that capital to feed the winners in the portfolio. So I think that's something that every venture capitalist has to do, and it's one of the harder parts of the job.
Yeah, it's such a fine balance because a lot of the times you're like this close to cracking the code. And so if you don't want to give up too early either.
Right. Yeah, absolutely. Um, yeah, we always want to support our companies and make sure that they end up finding a home if it's looking like they're not going to be able to scale to what we originally thought when we invested.
And when you say find a home, does it mean looking for a secondary investor?
Um, or an acquisition, early acquisition, yeah, or an investor with like deeper pockets that will kind of fund through a next pivot or whatever it might be.
Looking forward, what would you say are some of the investments or the companies or verticals that you're most excited about?
Yeah, it's a good question. I think in terms of verticals, we kind of already touched on just the opportunity that load growth provides, but maybe to take a step back on that, the projections for data center electricity demand are expected to double by 2030. There's many people who say that estimate's too high, doesn't include efficiencies in technology like we just saw DeepSeek. But I think regardless, we will have load growth, which has not been the case for utilities in a long time. And that ultimately will be the grid could be a bottleneck to AI growth because it takes a lot of time and investment for utilities to build new transmission lines and interconnect new power resources, regardless of what that power source is. Um, so I think at the same time, we're seeing that hyperscalers are plugging in chips as long as they have power. And so while many have these net zero goals, if forced to choose, they will likely choose power availability over slowing down kind of the AI race. So I think those two are going to come at odds, and that opens up a ton of opportunities. So there's a couple areas that we're excited about related to that. One is grid tech startups. So you maybe have heard the term grid enhancing technologies, but these are helping find excess capacity in transmission lines or using AI to optimize operating the grid. And the other is in efficient computing technologies. So that is how do we train models and run inference and store data? How do we do all of that, not slow down at all, but just use less energy? And so that is a good, like, doing it with less energy also means lowering costs. So it's kind of a win-win in that case. And we made an investment in this category in early 2024 in a company called Ocient, and they are an efficient database software company. So they process hyperscale amounts of data, these very, very large data sets, and they are 90% more efficient than competitors, which leads to 10 times lower costs. And they've really innovated on that software infrastructure, so it takes less hardware to run these queries. So it's kind of a perfect example of efficient compute, and we're actively looking for others in that category.
Yeah, I remember us talking about Ocean and a couple of other people. I feel like that's exactly where the intersection between climate and AI comes in.
Yeah,
And I'm honestly so excited that we're getting to a place where we're seeing a win-win situation like this, where it's low cost, it's more efficient, and it's better for the climate. So yeah,
absolutely.
hopefully we'll find more overlaps like this. And my final question for today is, what is a tip that you might have for fellow investors who are unfamiliar with climate tech and they might want to look into investing in the space more?
Yeah, it's a good question. I really do believe that the climate community is very welcoming of others who want to get into climate because we want everyone to work in climate in some way. I think maybe investors specifically have shied away because it might seem niche, but I think once you start to dig in, you'll see just how big it is because it touches so many different verticals. Um, so I think for just people who want to get started in climate, just network with climate funds and learn from them. Many of them have been around for a long time and they have lessons learned from looking at the sector over the past decade or so. I also think that people might shy away because they don't have this specific, climate knowledge, but I think that people are really eager to help and learn, and there's a lot of good resources online. And also there's a lot of good like newsletters and podcasts out there. So I really love CTVC by Sightline Climate and also Axios and Heatmap. For podcasts, I love Open Circuit and Political Climate and Volts. And there's a number of other ones as well, but those resources and content I consume on a regular basis. But I
That's so
encourage, yeah, I would just encourage more people to look at climate. It's not a trend, it's durable and it impacts a lot.
Yeah, agreed. And so if our audience want to find you, where's the best place?
Yeah, please reach out on LinkedIn. And I'm happy to talk more about any of these topics.
All right, thanks, Laura. Look forward
Thank
to
you so
having you
much.
again.
Thank you. Have a good one.